How do you start an equipment rental business and make $384,000 a year? Hi, my name is Nate Jones. I run this channel, make videos about entrepreneurship, how to start businesses, and which businesses you should and should not start. If you get value out of this video, hit like and subscribe. Okay, so we're going to talk through getting in the construction equipment rental business, and specifically I'm talking about heavier equipment today. I'm talking about skid steers and excavators specifically. And I'm going to see how much we can make if we were to purchase $1 million in equipment using a loan. So let's go through here. We're going through $1 million in equipment. And I basically said, hey, let's buy 4 excavators and 4 skid steers. The excavators are going to be around $150,000. So they may not be new. They may be lightly used. But $150,000 per excavator. $100,000 per skid steer. That puts us at 4 of each, which puts us at $600,000 in excavators and $400,000 in skid steers. Now, if we're going to buy $1 million worth of equipment, we're going to need to get a loan, okay? And to get a loan in the SBA guidelines or in any type of loan, they're going to require you to probably put 20% down because this is going to be a new venture for you. So 20% down, that's a hefty down payment of $200,000. Now, if you shrink this down to maybe buying one piece of equipment, this is probably more attainable to most people. But I wanted to run a real scenario of if you really committed and you got some equipment. So $200,000 down would put you monthly loan at $11,020. I would highly encourage you to really think about this, because I always say when you're wanting to get into business, I would make sure that you get a loan that you would be able to pay off every month. You'd be able to make the monthly payments if the business failed. So in this scenario, very hard to pay off $11,000 unless you have a high income job and you're able to float that for a number of months. But let's just go through this scenario. So a monthly loan of $11,000, your insurance is going to be about $1,000 a month because you're insuring that equipment while it's not rented out. And while it is rented out, your rentor is going to insure that equipment on their policy. So we're going to need insurance while it's sitting on our lot. A lease of a building or a parking lot, wherever we're going to put our business, where people are going to be able to lease our equipment, is going to be about $1,500 a month, because you're probably not going to need a very nice building. You're going to need more space, maybe a vacant lot that people drive by, and you can fence it in and have maybe a little tiny shed there where you're there between 8 to 5 where people can rent the equipment. Okay, so let's go through, those are our expenses. So every month we're going to have about $13,500 in expenses. And I know that seems like a lot, but let's go through it and see how much we can actually make running this business. So I looked up and I saw an average of about $600 a day in which we can earn by renting out our excavator. And for the skid steer, that's going to be about $400 a day. Now, depending on where you're at, that may be high, that may be low, but I tried to use an average number so we can really go through this exercise. The average rent time, I said about 4 days. So if someone's going to rent an excavator or skid steer, they're probably going to rent it 3 to 5 days, okay? Because they're going to have a job to do. Normally people don't rent big equipment just for 1 day. So they're going to rent it for an average about 4 days. And if we have 4 days every other week, okay, so that means we rent it for a 4-day period, and then it may not be rented out for a whole nother week. So about every month, we're going to be renting out about 8 days. So basically, we're going to rent it out 2 times. This is pretty conservative. A lot of people are renting stuff out all the time if you have the demand there. But let's look at 8 days a month. All equipment rented in 1 day would produce $4,000 a day. Let's go through that. We have 4 excavators at $600, and we have 4 skid steers at $400. That puts us at a total a day of $4,000. Okay, so if we take $4,000 times 8 days a week, that's what I said before. We rent something out for 4 days, takes another week. We rent it out for 4 days, another week. That's a whole month. Okay, so 8 days a month, 4,000 times 8 is $32,000 a month that we're earning by renting out that equipment. On a yearly basis, that's $384,000 a year. So gross revenue, $384,000. That's where we're getting that number. Now, let's dive into the cash flow, because everybody can talk about revenue, but let's actually talk about cash flow and profit, okay? So let's go back to that monthly earning number of $32,000, and then we have $13,500 in expenses, puts us at a cash flow, a gross cash flow of $18,500. Okay, so that $13,500 in expenses. Let me rewind here. That's the monthly loan at $11,000, the insurance at $1,000 a month, and then the lease at $1,500 a month. That's a $13,500. That puts us at a cash flow of $18,500. That's a $222,000 profit. Now, let's budget in some unforeseen expenses. The equipment breaking down, you have to pay somebody to fix it. Maybe something gets broken. There's all these unforeseen costs that are really associated with this business that make it kind of a downside. But the amount of money you could make without really working, all day long, and somebody else is paying your loan for equipment. I'll go into that in a second. So $220,000 in profit. I took out $50,000 in maintenance and random costs. Okay, puts us at a gross profit of $172,000. I really like this business because that gross profit, if we rewind, what's our down payment? Our down payment was 20% on $1 million of equipment. That's $200,000. So year one, if we don't have that many expenses on the maintenance, we're almost basically breaking even on our down payment. And a lot of people say, well, breaking even, like what? So yeah, but somebody else paid your loan on all your equipment for that year. And that loan that we have is a 10-year note, okay? So we put $200,000 down. We had somebody else pay all the loans that whole year. We made $172,000. Now going into year two, you're going to turn that profit and you're going to be making money while somebody else is paying for your equipment. What happens after the 10 years? Well, at any time, you could sell that equipment at a depreciated cost, but let's say the loan's done for that piece of equipment. Okay, great. You can sell it, and it's always going to be probably worth something. All equipment, unless it's completely destroyed, but 10-year-old equipment is still worth good money. So somebody else is paying for your loan, it's paid off, you still have a value there, and you're still making money. So $172,000 gross profit with only $200,000 put down. Somebody else is paying your loans. Okay, so what are we going to do after we understand the numbers? Because you could drill this down to saying, hey, I'm going to buy a $50,000 piece of equipment. It's the same numbers. It's the same thing. And the numbers have to be there. If the numbers are there, what we need to do is we need to think of it in a business mindset. And what that means is, hey, we're going to think of all the ways in which this business won't work. What are the ways that could put us out of business? Let's create strategies around that to ensure that it doesn't happen to us. And what I saw on this was, hey, we're not renting out our equipment. Why are we not doing that? Well, there's a sales mistake. There's a marketing mistake. We didn't get the information out there. We didn't get the name out there. People don't know you're running out of equipment. You're not in the contractor circles. You're not in those areas in which people trust you, trust your equipment. So you need to get your name out there, get it. I would always try to pick a location in which it's next to a highway or a road so contractors driving by and they know that they can rent that piece of equipment in case theirs goes down. Or people wanting to start a contracting business, but they may not need an excavator all the time. They may not need a skid steer all the time. But when they do, they're going to call you because they know you're in business. So having a marketing approach, having some sort of way to get people to know about your equipment rental business is going to be one of the most important things for this business. Probably the most important thing in any business is the sales. If you're not making sales, you're not in business. Okay. So the second thing is we get destroyed or stolen equipment. This means, hey, we didn't do our due diligence to the people that we rented the equipment out to. We didn't have a client contract, and I'll go through that in a second, but you need to have a contract, you need to have a vetting system in which to make sure that the people renting out your equipment, one, know how to use it, and number two, are going to return it without it beaten up to heck, and that you're going to be able to basically take back the loss of revenue or expense that you have because that equipment's destroyed. So a contract, a very solid contract that you would reach out to an attorney about, plan ahead for that, and make sure that you have some sort of vetting system in the community where you can look at these contractors and make sure that you get their insurance and get their equipment and you list it on their insurance as a loss payee additional insured. The reason I know that is because I own an insurance agency, and all of our clients, we tell them, hey, make sure that if you're renting equipment, let's list it on your policy so you don't have to pay the hefty fee from the equipment rental businesses for the insurance on that. You can insure that on the policy, and we have to send those certificates to the equipment rental places. So if you own the equipment rental, make sure those insurance agents are sending you the certificates showing that your piece of equipment is on their policy. Because if it's not, and it gets destroyed, and the contractor leaves town, you're trying to find them, and it may take months and months before you're paid for that lost piece of equipment, if you're ever paid. So make sure that you kind of get yourself in a position where, hey, we're going to set up with a firm, and there's firms that do this where you can actually charge the contractor an insurance fee, and if something happens, you're basically collecting from that third party, not from that contractor. That is a decrease in your expenses, but I would say best thing to do is if somebody doesn't have contractor insurance, I probably wouldn't rent them the piece of equipment. Okay, so the third thing is people aren't paying you, okay? So that means you rented the piece of equipment, you didn't take a down payment, and people kept it for too long and they didn't pay you for it, and they just returned it and they didn't pay you. So now you have to go after them. So making sure, like I said before, vetting those people out, making sure that they're an existing contracting business, making sure that they have a reputation in your community. This isn't a business that I would just start dealing and wheeling and dealing with everybody. This is heavy equipment, very expensive equipment. Make sure you know what you're doing and who you're dealing with to make sure you do not get screwed over. Number 4, unforeseen equipment expenses could potentially put you out of business on this. Making sure that you have cash reserves saved up in case you have to fix something on your equipment. If your equipment breaks down, not due to one of the people that is renting it, just because it just randomly breaks down, making sure that you have either a contract with a mechanic or some sort of mechanical company in which can go out and fix your machine right away, and that you have the cash to do so. Some companies run so thin that if a machine breaks down, they can't even fix it because they don't have the money. Make sure that you have the money to fix that piece of equipment. What we're going to do next, after we've done that and we've created strategies, we're going to legal up. What legal up means is we're going to create an LLC so we have a separate legal entity from us personally. You do this because if something happens, your business is separate from your own personal assets. You don't want to get involved in something where somebody can take your personal assets because of what your business made an accident on. So make sure you buy insurance, buy proper insurance that's insuring that equipment while it's on your lot, and potentially, and also setting those insurance standards with the people renting your equipment, that you're listed on their policy as lost pay, additional insured, and that you're making sure that those certificates are received by the insurance agent, not the contractor, because some people commit fraud when it comes to insurance certificates. What we're also going to do is we're going to create a client contract that is boilerplate, that I would suggest that you reach out to a local attorney and have them create that contract for you so that you can have that signed. So if something happens, you plan ahead for the things that are unforeseen, you have that contract signed, and then you can take that potential renter to court if they destroy your equipment. So hold people accountable, and that's what contracts do. After that, you need to commit to starting this business if you really have a passion for it. This is a business where you can make a ton of money. Year 2, you're basically getting all your money back from the down payment, and you're making money year 2. I really like this business because it's like a real estate rental, okay? Somebody else is paying your loan. Your asset value in this business probably isn't going to go up because the machines are going to go down in value. But that being said, in real estate, if you buy a house for $200,000, you're not going to get $200,000 back in cash flow. This business, you buy a piece of equipment for $1 million or $200,000, you should be able to make your money back on that equipment, if not by year 2, which is unforeseen in the real estate business as far as rentals. Okay, so a lot of opportunity in this business. Just make sure you know a lot about a heavy equipment. I would suggest that you do some research, know how to operate the equipment, and basically be in this kind of community. I would say, hey, this isn't a business that, if you don't know anything about the construction community, probably pretty hard for you to start because you're going to run into a lot of issues and problems, and you need to know who to trust locally. And if you got value out of this video, hit like and subscribe. Thank you.